the cutting edge Ethereum Layer 2 brought to you by Starkware Industries. This Layer 2 has been getting a lot of coverage recently. Of course, the airdrop helped. Some of the attention's been good, some of it's not so good, downright dirty. So is this protocol the next hot innovation in Ethereum scaling solutions, or is it something we should avoid as a big fat nothing burger, perhaps? Well, in today's video, I'm going to give you the simple down and dirty on Starknet and let you know my thoughts on this protocol and this token. Now, before we dive in, please do note no one has paid us to make this educational explainer video. This information is provided to you for free for educational purposes. This is not a recommendation for you to go out and buy, sell, or hold the coin that is being discussed in this video. Furthermore, you can see my full risk statement because, of course, crypto is risky. You can lose all your money, as well as my full portfolio disclosure in the description or the pinned comment on X. There you'll find all my current holdings as well as all my venture investments, affiliates, all that kind of stuff. So check it out. Okay, now, what is Starknet? Well, Starknet is a layer 2 blockchain for the Ethereum network. Starknet was developed and is currently operated by Starkware Industries, which is an Israeli tech company founded in 2018. So they've been around for a while. They're OGs in the space. Just so we're all on the same page here, a layer 2 is a blockchain that's built on top of a larger, more economically important and secure blockchain like Ethereum, the latter of which is called the layer 1 or L1. The purpose of most L2s is to increase the scalability and transaction speeds for their layer 1s. Now you can think of the relationship between layer 2s and layer 1s like a double stacked highway. Imagine there's a large highway that's always suffering from traffic jams. So city planners come in, they build a second highway that runs above the first one. Naturally, cars will access the top highway, which therefore means that the bottom highway can handle more traffic as well. L2s and L1s work together in a kind of similar way, and this is the relationship between Starknet and Ethereum. Okay, so Starknet more specifically is an Ethereum layer 2 that uses validity proof rollups. Now let's look at how Starknet works, and that will tell us about validity proof rollups. Like other blockchains, Starknet processes transactions and puts them into blocks on the Starknet blockchain. Starknet sequencers, these are computers that are responsible for doing this work. The sequencers work to filter out invalid transactions from valid ones. And once all the valid transactions are put together into blocks, sequencers then send them over to Starknet provers. The provers check to make sure that all the transactions are valid, and then they generate a proof, which is then sent over to Ethereum's validators for finalization on Ethereum's main chain. That's how it works. The proof is really just a small piece of code that mathematically proves that the transactions that it represents on Starknet are valid. So it's very light. Once Ethereum's validators have concluded that the proof is correct, it's recorded on Ethereum's main blockchain, which in effect finalizes thousands of different transactions in one tiny little piece of data. But the full data remains on Starknet. The data required for Ethereum to validate and record this proof ends up being very, very small. So this is why Starknet helps Ethereum scale and processes more transactions. Now, earlier I said that Starknet is an Ethereum layer 2 that uses validity proof rollups. Rollups refer to the idea that thousands of transactions are rolled up into one proof that's recorded on Ethereum. And validity proofs means that through advanced math, some really nerdy shit, basically, Ethereum validators are able to verify that the transactions represented by the proof are computationally correct with just mostly the proof itself. Now, if you read through Starknet's documentation, it's a great way to put yourself to sleep, but developers say that they use Stark proofs, which stands for Scalable, Transparent Argument of Knowledge. Don't worry. We're not going to do another deep dive on all that bullshit. Anyway, everything we just discussed, very important, very cool technology, by the way. Hats off to those developing this stuff, but that describes the technology at a pretty high level. Now, you'll notice that I never said Starknet is like super decentralized or anything. That's because it isn't in its current state anyway. It's not. In the future, it could be, obviously. Currently, the sequencers and provers are all centrally operated by Starkware computers. Starkware developers say that they have plans, of course, to transition the protocol into being a decentralized proof of stake network in the future, but this hasn't happened yet. A lot of these early networks go through this phase. It's important to understand. Okay, now that you understand how and why Starknet works the way that it does, let's now discuss the token, STRK. STRK currently has two main purposes, transaction and governance. Now, transaction fees on Starknet can be paid in either Stark or Ethereum. To be clear, it is optional, not mandatory, and Stark can be used to vote on protocol proposals. So those are the use cases. In the event that Starknet does at some point transition to a proof of stake blockchain, then the sequencers and the provers would, of course, be required to have big stakes of Stark in order to perform their operations. This would thus, of course, increase the utility for Stark and would probably enter some kind of delegated proof of stake thing where you can stake your coins and get a reward. But that transition hasn't happened yet, and it's not clear when it will happen. You could be literally waiting years. Remember, these guys were announced in 2018. Takes a while. With regards to tokenomics, Starknet developers minted a max supply of 10 billion tokens. Currently, only 7%, around 700 million of these tokens, have been unlocked. It's crazy stuff. It's a lot of coins, man. But it's pretty common for these early networks. The other 9.3 billion will be released on a monthly schedule from now until 2031. Now, out of this initial 700 million coins, half went to Starknet users in the form of an airdrop. The other half went to developers, e-stakers, and other groups working on the protocol. Now, with regards to allocations for the entire 10 billion tokens, here's the current plan, at least according to the developers. So it appears from the documentation from Starknet that a total of 1.8 billion Stark, or 18% of the supply, is reserved for retail. And most of these tokens will be allocated through Starknet's provisions program and rebates program. About 56% of the tokens are going to go to early contributors and investors and to the foundation treasury and to the strategic reserves. The other 26% is reserved for grants, operational needs, and other purposes. So that's where the tokens are. Now, before we continue, let me interrupt the flow real quick to let you know about something very important. The best damn newsletter in crypto. That's my newsletter, of course, called Wealth Mastery. And I know I'm biased, but my team of researchers and I put together a fantastic product every week. We know you'll love it. Every week, we're working hard to bring you the latest and best money-making insights on airdrops, altcoin news, altcoin charts, deep dives, technical analysis, the latest in NFTs, and much, much more. You can join our 110,000 weekly readers by signing up for free using the link down below in the description. Okay, now let's discuss some key statistics and key partnerships. According to DeFi Llama, Starknet ranks 18th out of all blockchains in terms of total value locked on chain. Now, it's a metric that can change very fast, so do keep that in mind, but they have $300 million currently. This means that when only looking at Ethereum Layer 2 specifically, Starknet is ranked 5th in terms of total value locked. Starknet has about 100 dApps, most of which deal with DeFi, blockchain, infrastructure, services. Both Starkware and third-party developers are free to build dApps on the network. Now, what about partnerships? On the technical side, Starknet does have some pretty impressive collaborations. The network, for example, has partnered up with Celestia for, of course, data availability services, because that's what Celestia does. Go watch a review on Celestia if you want to learn more about that. They're also working with Chainlink to make Chainlink price feeds available on the network. And Starknet also has a partnership with Bravos crypto wallet for the development of advanced wallet infrastructure and access for the Starknet protocol. These are pretty common partnerships for blockchains, by the way, but still great to see. Starknet does have a lot of heavy-hitting financial backers as well. The protocol received a lot of investments dating all the way back to 2018 from some of the biggest titans and names in crypto, including Pantera, Paradigm, Sequoia, Coinbase Ventures, even the man himself. All right. Mr. Big Dick Vitalik Buterin himself threw some money in here. Okay, now let's discuss risks and opportunities. In terms of risks, the first issue is the token's use cases, which is currently confined to only transaction fees and governance. Don't love it. And even the transaction fee use case isn't necessary because users can actually pay with ETH instead. So it's just this optional thing. And a lot of people are probably just going to use ETH. So until Starknet transitions over to a proof of stake network, there's not a huge amount of utility here for paying in Stark or using Stark at all. Now, utility doesn't always matter. It just usually does, and Stark tends to lack that as a governance token. The second risk is the network's tokenomics. There's been some controversy about this. A lot of headlines have come about it. Starting April 15th, we're going to see tokens coming out and continuing every month through to March of 2027. Millions of Stark will be released to Starknet investors and to early contributors, which is fine. They deserve to get their tokens, right? 64 million tokens a month are coming. The problem is that these releases have only started 2 months after the first batch of Stark tokens were actually released out to the retail crowd. Not the best look, to be honest. Usually teams and VCs have longer vesting periods. Moreover, only 18% of the 10 billion in total Stark token is allocated out to the little guys. By the way, the release schedule was actually reduced. So the 64 million is a reduced number after a huge backlash from the community because initially they were going to release 1.34 billion tokens or 13.4% of the supply. Fun story. Those tokens, by the way, we're on a 2-year vesting schedule. It's just that Starknet decided to start the 2-year vesting 2 years ago, long before the token ever went public, which is some BS move by the Starknet team, to be honest. Stuff like that left a bad taste in many investors' mouths. It's not the kind of stuff you like to see in crypto. And that brings us to issue number 3, of course, governance. With so few tokens allocated to retail, this pretty much confirms that the project will be exclusively controlled forever by the development team and the big VCs backing it. Now, of course, even if you really wanted, you're so passionate about governance that you want to go govern the Starknet platform for some unbelievable reason, you'll need hundreds of millions of dollars invested to even think about having any kind of say, having any kind of impact. Why would you do that? That's a crazy person thing to do, man. Don't go spend hundreds of millions of dollars by governance tokens to govern Starknet. No one cares. Now, what about opportunities? There are opportunities. We're being harsh on it. There's opportunities. Very possible that Starknet could continue forward. It transitions into a very powerful ETH layer 2. It captures a lot of market share, given that Starkware, of course, is a very sophisticated blockchain development company that does have the big partnerships, that it does have the big backers. This could really work in its favor. Centralized control can also be an advantage sometimes. I know I don't love it. You probably don't either, but in terms of making smart and timely upgrades, it can be useful. Moreover, I'm bullish on ETH layer 2s in general. So if Starknet is able to keep progressing, bringing more use cases for their token, we might see the protocol cut into Arbitrum and Optimism's Base's layer 2 market share. But given the issues discussed with the tokenomics and all that kind of stuff, I'm not super convinced at this point. But we shall see how Starknet continues to play out in the layer 2 space. Obviously, had a lot of hype when it came out, and they have a lot to prove still. Happy to be proven wrong, of course, and I hope that I am proven wrong. But those are my 2 Satoshis. Thanks for watching.